but kind of realizing that he's got to bend the knee because, oh my God, this thing's going to take over. And so, it's really, we're on the cusp of that really rapid adoption, in my opinion. Kind of the Malcolm Gladwell curve where you get to a 10% inflection point, and then boom, everybody knows that you need it. I mean, that's what Nashville felt like to me. I mean, a couple years before, we were all down there, cheering on, Jack as he had orange pilled Bukele, and, El Salvador was going to go on the Bitcoin standard. And that was fabulous. We had a nation state. I mean, now we've got the biggest nation state talking about it. You got Lummis introducing a bill, et cetera, et cetera. So,
Hey guys, welcome back to Everyday Finance. In this video, Larry Lepard discusses Bitcoin and crypto. Lawrence Lepard made a prediction about the future of Bitcoin, highlighting its potential for widespread acceptance and its potential to bring about a reset in the financial system. He also discussed the limitations of the current fiat currency system and emphasized the value of a stable currency. According to Lawrence Lepard, Bitcoin has the potential to surpass other currencies in the market, especially with the recent adoption of Bitcoin by El Salvador and the growing interest from more influential nations. He sees the recent developments in Nashville as a significant turning point. Lepard raises an interesting point about the acceptance of Bitcoin ETFs, which, in their view, challenges the notion that the government would undermine Bitcoin. They delve into the mathematical aspects of U.S. debt interest rates and deficit, ultimately predicting a potential collapse. According to Lepard, there is a belief that this situation will lead to a reset, resulting in Bitcoin becoming a more dependable form of currency. Lepard highlights that, unlike gold, which is commonly seen as a reliable form of money, Bitcoin is considered superior. Despite a decrease in ETF purchases, gold prices remain stable due to nations trading in their currencies and settling in the metal. Lepard predicts a reset between 2028 and 2035, with Bitcoin emerging as a dominant currency. And lots of things Larry Lepard discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
it's interesting, Walker. I mean, I think honestly, in the longer run, I'm not even going to, I think we're going to go through so many changes that I'm not even sure it's necessarily going to matter what nation states think, because we're going to get totally decentralized and we're all going to just kind of quote unquote do what we want. And these nation states, they're all going to kind of die. And I don't know if that means a dissolution of the United States or if we break into segments or, regions or, it's hard to see. This is a big fourth turning and it's hard to see exactly how it's going to unfold. But, the thing that has me extremely optimistic, I was just writing this portion of the book I'm working on, is just how rapid this technological decentralization is occurring. I mean, it's like, wow. And furthermore, as you were saying in your lead into the question, boy, shit is really breaking and shit's happening fast now. And, look, you have the chairman of the the chairman of the Federal Reserve Board citing Stein's Law, which is Stein's Law is if something cannot go on forever, it will end. And, he's saying this fiscal path is unsustainable. And so that just blows my mind. I mean, that was not on my bingo card, right? So, I mean, he's sitting there saying, okay, Jay, so what are you going to do about it? I mean, and then you've got, guys at the top like a Larry Fink, who is just the ultimate fiat master and not somebody I particularly admire, but kind of realizing that he's got to bend the knee because, oh my God, this thing's going to take over. And so, it's really, we're on the cusp of that really rapid adoption, in my opinion, kind of the Malcolm Gladwell curve where you get to a 10% inflection point and then boom, everybody knows that you need it. I mean, that's what Nashville felt like to me. I mean, a couple years before, we were all down there, cheering on, Jack as he had orange pilled Bukele, and, El Salvador was going to go on the Bitcoin standard. And that was fabulous. We had a nation state. I mean, now we've got the biggest nation state talking about it. You got Lummis introducing a bill, et cetera, et cetera. So, you got Jason Lowry being cited in RFK's speech. I mean, the strategic importance of it. So, you've got the ETFs. I mean, since, you and I have last done a podcast, I mean, the ETFs have been approved. I mean, as Saylor pointed out, and I know this was to be true with me too. When I would try and orange pill wealthy friends, their response, even if I could get them to accept the premise that it was a good thing, their response was, yeah, but the government's going to kill it. Well, the government just approved an ETF, you know. So, that argument's kind of off the table. Now, look, when it gets to be existential and they realize the dollar is failing, and particularly if Kamala wins and Warren is her Treasury Secretary, maybe we've got a 6102 risk. But, for now anyway, the government is, in my view, being pretty friendly towards it. And we're not Kamala or not Warren and Biden, but, all the candidates. And I don't know who's going to win this election, but I certainly, if Trump wins the election, I don't think we're going to have much trouble in this area. So, to me, the big thing that the conference showed is that this Overton window has shifted. And, that fits in nicely with my overall macro thesis, which is it's getting really interesting now. I mean, they cannot stop this spending. They cannot stop this debt accumulation. We're over 35 trillion.
Michael Saylor left a mysterious message that seems to be directed towards the German government. Their selling operations are exerting significant pressure on the market, causing a detrimental impact on the momentum of Bitcoin and other assets. The translated message suggests that everyone receives Bitcoin at a fair and appropriate price. The recent operations of the German government Bitcoin wallet are significant in relation to the message's background. The second consecutive day, the German government's wallet has been accepting Bitcoin at the close of business hours. Some analysts have suggested that this is a buyback after a sale. However, in reality, the unsold Bitcoins are being returned to the German government's control wallet. While this may seem unusual, it is possible that such a large institution lacks trust in exchanges and prefers self-custody. Yesterday, an additional 3,073 BTC were deposited into the wallet, increasing the Germans' temporary balance to 27,467 BTC, which is equivalent to approximately $1.57 billion. Today, the German government has announced another Bitcoin discarding. The market has experienced a significant impact on both the price of Bitcoin and the overall mood due to this substantial selling pressure. One way to interpret Saylor's message is as a reflection on the current state of the market and the impact that the actions of this institution have on it. Perhaps the Saylor is making a mockery of the decision to sell a significant amount of BTC on the market in such a ruthless manner. This relentless selling by the German government is causing Bitcoin to struggle to maintain its momentum. It's worth noting how this activity underscores the influence that institutions and major holders wield over the cryptocurrency market, often leading to unpredictable price fluctuations. Temporary price reductions resulting from large-scale sales can have a motivating effect on certain individuals, while simultaneously evoking apprehension in others. Let's get back to Larry Lepard interview.
We when COVID came along, they upped the spending by $2 trillion, and you get it. I mean, whether it's right or wrong, and COVID was fake, but whatever, you can kind of understand how and why they did it. But what you would think is in a normal system, okay, that emergency's over, spending goes back down. Well, no, it hasn't. It just keeps on growing, and so and that's the way these parabolic moves happen, and so. Jay Powell is going to be forced to print more money because, as Lynn has so brilliantly pointed out, nothing stops this train, right? I mean,
yes.
The fact of the matter is that you cannot support this level of debt without having more underlying monetary units, and there's only one place those can come from, and that's a combination of the Fed and the banks. And so, they're trying to pretend like they don't have to do it, but they're going to do it. And as always, the Fed's probably going to wait. They'll be behind the curve, and they're going to wait until something is going to break. And, it feels to me like we can't make it for another year and a half without something breaking. But I could be wrong. I mean, when Silicon Valley broke, and that was something breaking, they violated the law. They violated Dodd-Frank. They changed the rules, and they saved it. And so they kicked the can. So they they do have all of the tools and the megaphone, and most of the sheep are pretty willing to kind of play along with their game. But I think they've got more and more cracks in their armor, and they're fighting a losing game. I mean, my guess is Jay Powell's sitting there thinking to himself, "Why the hell did I take the second term?" And God, May of 2026 can't come fast enough because I want to get the fuck out of here.
Amidst the recent market turbulence, Bitcoin made a dramatic comeback, surpassing $59,000 on July 10, 2024. This resurgence has injected new energy into the market, driving the growth of Ethereum, Solana, and Avalanche. Aptos and Arbitrum have experienced significant gains, while the overall market recovery has sparked optimism among investors. However, the underlying market sentiment remains mixed despite the positive momentum. Market experts maintain a cautious stance. Marcus Thielen, the founder of 10x Research, believes that Bitcoin's climb to $60,000 may continue. However, Thielen also predicts that this rally could be short-lived, with potential risks. Bitcoin's recent corrections, which have brought it back to the $50,000 range, suggest that a technical base has formed around the $55,000, $56,000 bracket. However, it's important to note that ongoing downtrends could have a negative impact on Bitcoin in the midterm. Our senior analyst at K33 Research predicts that Bitcoin's price will continue to experience volatility until October. Historically, the third quarter has delivered the weakest returns, and this is further compounded by external factors such as Germany's BTC sales and the ongoing mid-EG repayment distributions. According to Lundy, the market will experience fluctuations in the cryptocurrency landscape as it absorbs these sales during the summer. The recent increase in Bitcoin and altcoins provides some hope amidst market uncertainties. However, there is a concern about prolonged volatility which could overshadow this recovery. Analysts are projecting both bullish peaks and interim corrections. Investors should stay alert and make decisions based on thorough market analyses. Staying informed about the ever-evolving crypto market is crucial for effectively navigating its risks and reaping its potential rewards. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.